Hey everybody, I am so excited that you're here and that I'm here today. We are going to be talking about one of my favorite things to chat with people about. It's about paying yourself as a business owner. So, if you're new here, I want to tell you just a little bit about me. I am Megan Nas. I am a CPA. I used to be a corporate accountant, and now I'm a business owner. I went out on my own. I truly love working with business owners who want to do the right things with their money. And I think that's you because you are here and you want to do the right thing with your money. And I wholeheartedly believe that if you get the money foundation set up in your business, you will free up so much headspace and stress so that you can use your creative powers to build your business and create the impact that you want to with your business. So I also think that a lot of people feel like they don't understand the money stuff, so they don't even want to deal with it. And that the only time they deal with it is when they absolutely have to at tax time. And then it's kind of like this like crazy rush to get things done. And then basically they don't have to worry about it for another year. I also believe that there are people out there that if they have like a bookkeeper and somebody who does their taxes, they feel like they have their bases covered and they don't need to focus on the money stuff because someone else is handling that. But that's really not the case, because at the end of the day, you as the business owner are ultimately responsible for making those proactive decisions, those decisions on like what you're going to spend your money on and how much money you're able to generate. All of that falls on your shoulder. So the bookkeeper is reporting things that happen historically. The tax person is doing compliance and reporting things that happen historically, but you are the one in charge of your money and dictating where it goes. So that's why this is super important. And I think you're going to get a lot out of today's message. So I'm super excited. So what we're going to talk about today is paying yourself an owner's salary. And first I want to define what an owner's salary is. I have something on my screen here. What an owner's salary is. So an owner's salary, and this doesn't really matter, like when I'm talking about owner's salary, it doesn't matter how you're organized. You can be a sole proprietor, you can be an LLC, you can be an S Corp. It's basically a consistent paycheck that you can depend on, and you know the frequency of when it's happening, and you know the dollar amount of what it is. So it's basically you taking a paycheck as if you were working for someone else and getting paid a wage, right? That is what I consider an owner's salary. So there's another type of way that people operate and pay themselves in their business, and it's called an owner's draw. And that's basically taking money out of the business when you need it for whatever reason. It's not consistent. You could decide that you want to take 1,000 here or 500 here, or you have a car repair and you need an extra, $1,500, so you take that out of your business. Those are considered draws. Those are not consistent. Those are more discretionary. And a lot of people will think, well, I'm paying myself for my business because I'm taking draws and I'm using money, personally, so I'm getting paid. That's not what I'm talking about here. I'm talking about owner's salary, something that's consistent, something that you know the dollar amount of and the frequency. This is so important because this is going to help you budget for your business. It's also going to help you budget personally, which is incredibly important, because if your personal finances are kind of in array and all over the place, then it's more likely that your business is like that also. So it helps create these foundations of like, I know I'm getting paid this much money, and then here's what I need to do with it, and here's where it needs to go. So when I talk about budgeting, it sounds horrible and scary, but it's really just making a plan for your money on where it's going to go, and you're in charge, and you're making proactive decisions instead of reactive decisions. Proactive is, I have this money in my bank account, here's what I'm going to spend it on. Reactive is, oh crap, I only have this much in my bank account, where did my money go? Right? That's a pretty good, simple example. So today we're talking about owner's pay and owner's salary. And I think a lot of people's current mindsets are, we've started our business, we've been in business, you're the only owner of your business. So what does it matter if you separate out owner's pay, because all of the business money is technically your money if you're the only owner, right? Um, or you could be starting out in your business or have been running your business like this for a while, where it's like, my business needs every dollar that I make to keep operating, so I don't have anything left over to pay myself, and I don't have anything left over to pay taxes. And you basically shift the priority of your business from paying yourself to paying everyone else, and you're picking up the leftovers, which that's not right either. I mean, think about if you put a call out there and you wanted to hire someone and you said, hey, I want to hire you to do this job. I want you to work the hours that I work. I want you to do all of the things that I do, whatever your responsibilities are in your business, and then tell them what you're going to pay them is what you have been paying yourself. I guarantee you're not going to find anyone that would want to work for that position. So by you not making a priority to pay yourself, you're not taking care of your most important employee in your business, which is you, right? You're the most important person. You should be prioritizing yourself, and everything else should become after that. And the whole reason that we're in business is to make enough money so that we can have the freedom to do the things that we want to do, whether it's stay at home with your kids, if it's travel, if it's dictating your own schedule, or just being independent so that you don't have to rely on anyone else. Like, that's why we're in business. So we need to prioritize being able to pay ourselves so that we can pay our bills. Otherwise, we're just running a business for the stress and the headache and not getting any financial benefit from it. And no one would go work at a job under those circumstances, so you shouldn't either. So I want to take our current mindsets of, I have to pay all of these other business expenses, and then if there's anything left over, I'll pay myself, because truthfully, there's never anything left over, because typically the more money you make, the more money you spend, right? So I want to take our mindset from there and shift it to prioritizing us and prioritizing making sure that you're getting paid for the work that you're doing in your business. So it's a little bit, it is definitely a mindset shift. But I want to emphasize that. And when you're struggling with like, oh, I can't afford to pay myself, I want you to write that down. Like, I deserve to get paid for the work that I'm doing in my business. I am the most important employee. Like, you have to put that at the forefront of your mind. So today I'm going to show you 3 steps on how I kind of have shifted my business, and with a lot of the people that I work with, on how to get them paid and prioritized. But what I want to talk to you about a little bit is, let's see, I have my notes over here really quick, is if you're in a situation in your business where you're taking all the leftovers and you're basically paying everyone and everything else first, and at the end of the day, you're thinking to yourself, well, I don't have any money left over to pay myself. What I want you to do is take a look at all of your expenses that are coming out of your business, because you probably have some that are, duplicates and you don't really need them, like 2 different subscriptions for the same thing. You probably have some that you're not even using or aware of. You might have some that are just expenses going out, but they're not really generating any kind of return on investment or return on time. It's not making you do things faster or easier, and you're not saving any time. So it's just money going out the door. If you can cut some of those expenses and shift that money to being able to pay yourself, that's where you're prioritizing yourself over all of your business expenses. So I know it's a little bit challenging if you're like, well, I don't have any money to pay myself. I bet you do. I bet if you look at your business, you will be able to go through all of the expenses, everything that you're spending money on, and find places to cut. And I'm not saying cut expenses just to cut expenses, but cut expenses so that you can pay yourself, so that you can prioritize yourself. So it's a little bit of mind shift work here. And I know I've said that like 3 or 4 times, but it is really important. It's not just as easy as saying, hey, you should just start paying yourself, because if you start paying yourself and then you have all these other expenses and then you can't afford, I mean, that's going to put you in a tough situation too. So if you're in a spot where you're like, I truly don't have any other money to pay myself, I want you to review your expenses and ask yourself, is this expense that's going out helping me reach my goals of being able to support myself, to pay myself, to, build more profit in my business? Because profit is ultimately That's like what you're striving for, is profit in your business. You can strive for revenues, because without revenues, you won't have profit. But you can also have a business that makes like $100,000 in revenue. And if you have $95,000 in expenses, you only have $5,000 of profit. So you did all of this work to generate $100,000 in revenue for and you get $5,000 as like a reward, as your profit. So focusing on reducing your expenses and at the same time trying to increase your revenue, that's what's going to generate profit. Profit is what is available to pay you. So if you're struggling with not having enough money to actually pay yourself because of all of your business expenses, I want you to sit down, look over like the last 12 months of your expenses and go line by line and see if there's anything that you're spending money on that you don't need, that isn't helping you generate revenue, that's not saving you time, and that's not essential to your business. Because if you cut those expenses, that's what's going to generate more profit. That's what's going to be available to pay you. So now that I have that all out, just a little bit of like tough love. I love you all. I know you can do this. And I want to see you succeed and pay yourself in your business, because it's so important. Yesterday on my Instagram story, I shared that when I first started my business, it was in 2015. I had just had my daughter, Allie, and decided I wanted to stay home and not go back to my corporate job. And so Brandon and I went from having 2 paychecks to basically 1 while I was, on maternity leave and all of that stuff. So I did some taxes on the side, and because that's what I used to do at my old job, was a lot of tax work. So I was doing taxes, and during tax season, it was great because I'm like, oh, we finally have money again. We're not living on 1 paycheck. And that money, so it came in like mid-January to like April. It was nice. And we continued to spend like we were living in like on 2 paychecks for a long time. So by the time like September and October rolled around, I had no money left because I had spent it all. And I think it was one of the first times in my life I'd ever been excited for the upcoming tax season, because I knew that I would have more money coming in. And my business was so dependent on revenue in such a short time frame. And I was not smart and did not budget my money to last me over a longer period of time. I just kind of spent as I spent. So I'm talking to you about paying yourself and being consistent. And I, as an accountant and CPA, did the same thing. So everybody does it. Everybody struggles with this. I think that the tips I'm going to give you today, though, are going to be super helpful. So as I talked about a little bit earlier, I just want you to remember the reason you started your business was to make money so that you could have the freedoms that you want to have, depending on who you are and what your priorities are. So keep that in mind. If you're struggling with, I don't think I can afford to pay myself, remember why you started your business. Let me see here. Okay, so what I want to show you, I want to dig into the habits basically of what you need to do in order to pay yourself consistently from your business. There's 3 things that I have done and that work really well. First of all, I look at what I actually need to bring home from my business to contribute to my household income, to my personal expenses. So what do I need to cover and I want you to do this, what do you need to cover your rent, your mortgage payment, your fuel, your groceries, all of your expenses that you incur during the month? Like, what do you need from your business to bring home? And that's like your bare minimum. Like, that's how much you absolutely need to pay yourself from your business in order to pay all of your personal bills to survive, right? So that has to be a priority, not just taking out money here and there, but like, I know I have these bills coming out on these days, so here's when I need the money. And I suggest like taking a paycheck from your business, like twice a month is a really good schedule to be on. Sometimes people like to do it more frequently, like they do it weekly, they'll take their paycheck. So it really just depends on what works best for you. I personally like to coach my clients to start doing their money stuff like on a weekly basis, because it builds really good habits consistently. And it seems like you build your habits faster because you're doing it weekly. But anyways, step 1, figure out what you need to bring home from your business. And like, what's the bare minimum like, what do you have to bring home? Whether it's like $500 a month, whether it's $1,000 a month, like what do you need to cover your personal expenses and your wants and stuff like that? And then we have to like basically back into that number from your business. So that's step one. Step two is I then determine the percent of revenues that I want to pay myself. So I don't randomly just take out dollar amounts of money from my business. I basically, every dollar that I make, I say 50% of that is coming to me for owner's pay. So I have personally designated 50% of everything I make is basically mine. The other 50% is for taxes and to put some money in savings and to cover my business expenses. I'm able to do that because I don't have a ton of overhead and business expenses. A lot of online coaches and a lot of online businesses don't have a ton of overhead. I mean, you don't necessarily have like a lot of employees. You don't have rent necessarily. You don't have a brick and mortar business. So some people, they need more money for their business expenses, so they can only afford to take out like 30% of whatever they make for revenue. So if you have no idea, I think a really good starting point would be like 35 to 50% of saying, okay, every dollar I make, this is what is going to me. And what I have done is I have set up a business savings account called Owner's Pay. And I take that 50% and I put it in that business savings account called Owner's Pay. And I hold it there. One other thing that you can do is figure out how much you need how much your business expenses are, right? Like I would look at like 3 to 6 months. Like what have your business expenses been for 3 to 6 months? Like your essential business expenses, the ones that you can, not the fluff that you can cut or that you're going to cut, but things like your cell phone, things like your, your internet, any like website fees, stuff like that. Like what do you have to run your business? Total those up for like 3 to 6 months. Then look at what your revenue was for 3 to 6 months, right? Total all that up, and then divide the expense number by the revenue number. That will give you a percentage, and that percentage is the percent of all of your revenues that you need to cover your expenses, right? So if you take that number and it's 35%, then you need at least 35% of all of your revenue to cover your business expenses. So keep that in your business account. The rest of it is available for paying you, savings, taxes, right? So that's kind of that's the second step. Set up a separate bank account, transfer a percentage of your revenue into that holding account to get it out of the regular business account. So then what it also does is when you look at your business account after you do this, you see the number that's available for your business and taxes. You're not looking at like a huge number or a number and being like, oh, I have all this money to spend in my business. It kind of reins you in a little bit, because remember, just human nature is the more money we have, it seems like the more money we spend, right? I think everyone has been in this situation. I used to live on $200 in college and like $200 a month outside of like rent and stuff like that. And I wish I could go back to that. I have no idea how I did it, but I think I ate a lot of like bread and ramen noodles. Gross. So anyways, okay. Step 2, set up a separate savings account for your Owner's Pay. Take a percentage of your revenues and put it in there. What this does is when you have really high revenue months, you're putting a higher percentage into this Owner's Pay savings account. And when you have lower revenue months, you're putting a lower percentage in. So hopefully what happens is the higher revenue months will offset with the lower revenue months, and that money just rolls over and is available to you to transfer to your personal account as a salary. So I like this method, the percentage method, because you're not stuck trying to do a specific dollar amount, which can be really challenging. If you're like, well, I'm going to pay myself $2,000 every month, but you didn't get $2,000 in deposits, like that's a struggle, and that causes a lot of like psychological, like I'm a failure, I can't do this, a lot of that stuff. So all of that goes away. And this is so foolproof that even if you think you're bad at math, you can take 50% of a number or 30% of a number, whatever you decide your salary is. Like, you don't have to be good at math. You don't have to be good at accounting. You don't have to be good at numbers to implement the system. That's what I love about it, and it's so foolproof. And if you do it like on a weekly or semi-monthly basis, you just build these habits, and then you don't even think about it. All right, so step one, we talked about figuring out what you need from what you absolutely need to bring home as a paycheck to cover your living expenses. Step two, determine the percent of revenues that you want to transfer to a temporary business savings account called Owner's Pay. Step three, this is the step where you're actually going to pay yourself. So I don't like to take all the money from Owner's Pay and put it into my personal checking, because I'll spend it all. And I think you'll spend it all, because that's just what we do. So and that's where you get in this like living feast to famine cycle, where it's like, woohoo, I have a lot of money, and then not. And then you're like excited for tax season. So you put the money in a temporary savings account for your business. And then from that account, that's what you draw your regular consistent salary from. So, and that regular consistent salary is determined in step one. How much do you need to bring home each month to cover your expenses? So you can determine the frequency of how you want to get paid, and how, like what the dollar amount is depending on the frequency. So if you're going to pay yourself, you're like, I need $1,000 a month for my living expenses, and you want to pay yourself twice a month. So then you would take a $500 transfer from that Owner's Pay savings account to your personal account 2 times a month. There's your consistent salary. All of the money that is in that account is going to roll forward to help you in months that maybe your revenue is not so high. It's just going to build up. So each month, yes, I'm going to be able to bring this set dollar amount home. This is the beauty of it. It's so easy when we break it down in steps like this, because it's foolproof and you can totally do it. And then as your business grows, and as your business starts generating more revenue and maybe more profit, because you're being a little bit more careful with your expenses, that Owner's Pay account might be building up to a pretty good dollar amount. I mean, then you can give yourself a raise. Then you can pay yourself, instead of $1,000 a month, you can pay yourself $2,000 a month. You know what I mean? But you can look at that account and be like, here's all the money that I have in this account to pay myself. How many months is that going to last you? You can start looking at that as like, I have this money to pay myself, and it's going to last me 6 months. So you're like, well, 6 months is a long time. So maybe I want to bump up my salary a little bit, and maybe it'll last me 4 months, because you can just start looking at your numbers in a totally different way. And none of this has to do with accounting. None of this has to do with like QuickBooks. I mean, this is all percentage-based numbers and flat dollar amount. So I know that you can do this. Okay, so I don't want to take up any more of your time. This has been like 20 minutes. And my internet hasn't gone out yet, which is crazy. I use this process in my business. I advise my clients, my one-on-one coaching clients, to do it, and it has been working fantastic. I do something similar, saving for taxes, which we're going to get into next week, and I know you're going to love it. So what I want you to do is figure out what days you want to sit down to do your money stuff, and then start writing a checklist of what you're doing each time you sit down to do this. Like, okay, I sit at my computer, I pull up my bank account, I see what money has been deposited. I take 50% of that, transfer it to my owner's savings account, my Owner's Pay savings account. Then I transfer $500 to my personal account. All the numbers I'm using are examples, but write that down. So then when you sit down the next week to do it, you're not having to spend time thinking like, okay, what am I supposed to be doing? You pull up your checklist and you're like, boom, 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 and you're done. Like, you're done with your money stuff. You're doing it every Friday. You know exactly what you have to do, and it makes it so easy, and it takes the stress level out of the money stuff. So I know you can do this. I would love to hear how this goes for you. If you have something similar already set up in your business, or if you're going to try this. If you have questions or comments on this, write them in the comments. The video will be posted, and I will get back to you on this. If you want additional training, let me know, because I think this is such an important topic. Work on shifting your mindset. You deserve to be paid from your business, and this is a way that you can do it consistently. And even if you don't have a lot of revenues, even if you're like, oh, I'm just starting out, I don't have enough money to pay myself, I want you to get in the habit of doing this from the get-go. Like, start getting in the habit of this, because you're going to build these habits, and as your business grows, you're going to have these really good foundations in place already. So it does not matter what the revenue is in your business. You can absolutely start doing this, and super excited about it. It's one of my favorite topics. Thank you guys so much for joining. And if you have any questions, put them in the comments. Otherwise, I will be back next Friday, and we're going to talk about saving for taxes. Hope you guys have a great weekend, and I'll talk to you soon.